about to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free with me. Let's go, let's be free with Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free.
Good evening or good afternoon. Welcome. It's Jim here at TutorDU HQ, and we are here live for our third in this series this term of our A-level business study live streams. Tonight's topic is break even, and I'm joined tonight by two familiar faces. We've got Mike in the middle and Pete on the right. Good evening.
Good evening.
Good to hear
Evening,
that
Jim.
the sound is working. Well, there's a slight delay there, but I suspect it's just that Mike and Pete are just being a bit shy to say about saying, well,
Definitely.
I mean, we have, which isn't usual for you two. So we have got quite a difficult session tonight, not as in difficult for us to deliver, but difficult for the live chat students who are joining us. It's on break even, and therefore I'm guessing there might be the odd calculation thrown in there as well as some other stuff.
Definitely. Lots of calculations here. So calculators at the ready, please. And a really crucial topic. So yeah, fasten your seatbelts.
Too right. So for those of you who've not joined one of these live sessions before, a particularly warm welcome to you. In the live session, our students get the chance to have a go at the questions by typing their responses into the live chat window. So please don't be shy. Have a go. Nothing wrong with having a go, even if you don't necessarily get the answers that Mike and Pete will then show on the screen. Massive numbers joined us live last week, but even more joined us on replay or catch up. So if that's you watching on replay or catch up, welcome too. You get a chance not to use the live chat, but to pause the video, give yourself a bit more time, maybe write your workings down and then compare your answers by restarting the video. Or you can just run it as it was and see whether you can do the stuff under time pressure. Right, we've got about 30 minutes or so, lots and lots of activities to get on with, lots of students still joining us. Should we do a warm-up activity to start with, Pete? Mike, who's kicking us off?
Yeah, I'm going to kick us off this evening. So we'll let's see if we can crack the code. In order to unlock the rest of the activities we have planned for you, we need you to put these businesses in order based on how much profit they earned in the last 3 months. So highest to lowest, put the businesses in order of how much profit they earned in the last 3 months. You can just do the letters in the chat window, please. So A is Zoom, B is McDonald's, C Amazon Prime, D for Apple, and E for United Airlines. So put them in order of how much profit they earned in the last 3 months, highest to lowest, please. Just put the letters in the chat window. Hello as well to Sasha and Poppy. Thanks, Alex, got yours, and Hilby. Zinnia, yours is through as well, and Alex, keep them coming, guys, please. We'll see if we can get these in the right order. Jim, you'll bear with me, see if I don't think I've seen the correct one yet. Although, having said that, I think Megan was the first in. So here's the correct order on the screen. Based on how much profit these businesses earned in the last 3 months, highest to lowest, Apple, Amazon, McDonald's, Zoom, and United Airlines. So Apple were top, Amazon second, McDonald's third, Zoom fourth, and United Airlines fifth. Well done all those who took part, and particularly well done to those that got that right. Thanks to you, we've now unlocked the rest of this evening's activities. Peter, let me hand over to you then.
Thanks, Mike. So what we've got here is an activity called Broken Formula. You need to use the elements that you can see on screen to create the formula to calculate a given topic area. So we're going to start off with the break-even level of output. So can you use what's on the screen to tell me the formula to calculate the break-even level of output? Answers in the chat window, please. So think about the information that you've got available to you. How can you use that to construct the formula for break-even? Really important one, this one, and you can use it in a number of different questions. Obviously, you've got the standard question where you'll need to calculate break-even, but you might need to make some reference to it in a written, longer question, for example. Okay, we've got some answers coming through. Megan is our first one. Joe, thanks for that. Sasha. Couple more seconds, see what's coming through. It's important to remember that not all elements are used, so don't feel like you have to use them all. Excellent level of engagement here. Let's have a look at the answer, please, Jim. Okay, so fixed costs, we remember they need to be paid regardless of output, divided by contribution per unit, which is selling price, take away variable cost per unit. So that's how we find our break-even level of output. Okay, I think we had a couple of right answers there. Well done. Let's move on to the next one, margin of safety. So again, we don't have to use all the terms on screen. How do we calculate the margin of safety? So remember what the margin of safety is. The difference between break-even level of output and what. If I give you too much, then I'll be giving the answer away. Megan's quick off the mark with a response. Thanks for that, Megan. And now they're coming thick and fast. Right. Thanks for that. Actual output, take break-even level of output. So I think Megan was the first one there. Great stuff. Well done. Quite a few correct answers there. Let's take a look at our next formula question, contribution per unit. Now, I think I might have given this one away before. How do we calculate contribution per unit? Yeah, I think this is coming thick and fast. We're getting lots of correct answers here. Well done, everyone. Let's see. Here we go. It's been revealed. Selling price, take variable cost per unit. Remember, there might be some stages where you need to calculate total contribution. Okay. So remember the difference between both of those formulas. You've got the contribution per unit and then total contribution as well. Let's take a look at our next question, please. Sorry about that, Jim. So unfortunately, that's the end of our broken formulas. I was getting really into that, and formulas are one of my favourite element of teaching the finance aspect of break-even. So let's look at
That's
some
enough broken
examples.
formulas, Pete. Come on, that's enough.
Thanks, Pete.
So we'll take a look at some exam goal, and I'll hand you over to Mike for that.
Thanks, Pete. Sorry to interrupt you. I know you enjoy those broken formula. So some exam gold, and crucial to remember when we talk about break even, we're talking about units. It's quite common for students to put a pound sign in front of the break even quantity and omit the word units. So remember, when we're talking about break even, we're talking about a quantity. So we're talking in terms of units or passengers or customers or whatever. So when you're calculating the break even point, remember to give the answer in units, and also remember to round your answer up, regardless of what comes after the decimal point. Always round up. Okay, if the initial answer is a decimal, we're going to round it up because the business will only break even when a full product is sold. They can't sell a part unit, part product, so we're going to round it up. The example on the screen there, 150.25 units. Normally, mathematically, that would be rounded down. Don't do that. Round it up to 151. Okay, a couple of really important points to remember. Right then, calculators at the ready. We're going to do a couple of calculation countdown questions. Question 1 is on the screen here. A business has an average selling price of £25. The variable cost is 1/5 of the selling price. What is the contribution per unit? We'll start the timer now, please, Jim. Good stuff. Lots and lots of answers coming through in the chat window there, and general agreement on the answer. Not universal agreement, but general agreement on the answer at £20. Just remember, practice working against the clock, practice working under time pressure, because it's an important skill to develop when you come to your exams. So a minute there to do that calculation for some of you may have been straightforward, for others may have been more challenging. But get used to working under time pressure. Practice that skill. So we had a business with an average selling price. Sorry, if we just skip back, Jim, thank you. Business with an average selling price of £25. The variable cost is 1/5 of the selling price. So 1/5 of 25 is £5 per unit. To calculate the contribution per unit, we're going to take the selling price at £25, deduct the variable cost per unit. So the answer is £20. Extremely well done. Let's have a look at another one of those. And again, we'll work against the clock with this one, hence the name, calculation countdown. So we have a business with monthly break-even output of 10,000 units. If the monthly fixed costs of the business are £50,000 and the variable cost per unit is £2.25, what is the selling price? Slightly more challenging question. We were going to give you a minute on this. I'm going to give you 60 seconds. Here we go. Good stuff. A whole 60 seconds on that, so much more generous than 1 minute. And a few answers coming through, not perhaps as many as with question one. That's to be expected because this is a bit more challenging. Sasha, I believe you were first on that one, and Megan was pretty close behind, and Hilby as well. So the answer on the screen here is £7.25. Let's just think about that, because I suspect there may be some confusion out there. Business has a monthly break-even output of 10,000 units, so 10,000 units to break even. The monthly fixed cost of the business are £50,000, and the variable cost per unit is £2.25. What is the selling price? Well, the contribution per month must be £50,000 in order to break even. So it means a contribution per unit of £5. 50,000 divided by 10,000 means we must be looking for a contribution of £5. If we add that on to the variable cost per unit, 5 plus £2.25 comes to £7.25. And we can put that back into our break-even formula, fixed cost divided by contribution per unit, and the answer will come out as 10,000 units. So we can check it. And that really helps your understanding of these different formulae by rearranging them, by doing different and more challenging calculations. It helps to really drive that home. Extremely well done, everyone who answered the question, whether you got it right or otherwise. Pete, time for some bubble quiz, I think.
Thanks, Mike. So speaking of rearranging formula, that comes in useful here. So which of these formulae would calculate the break-even level of output in units? So you need to identify the correct answers. It could be all four, it could be one, it could be two, it could be none. Answers in the chat window, please. There's a lot's coming through so far that think it's C. Think about this idea of rearranging. Give it a couple more seconds and see what we think, if there's any more than C. Okay, let's take a look at the answer, please, Jim. So resoundingly, we had lots of people say C. Well done if you said C. All right, some A is coming through now as well. Sorry, I might have asked Jim to change the slide a bit too quickly there. So A is correct as well. Remember, we looked at calculating the margin of safety earlier. If we know what the current output is and we know what the level of margin of safety is, remember that's the amount the business can afford not to sell and still break even, i.e. not make a loss, we can rearrange that concept and work out the break even level of output as well. So A and C were the answers we were looking for here. Let's take a look at question number 2. So which of these actions would increase the break even level of output? We assume here that all of the things are going to stay the same. So the options we've got are lower variable cost per unit, higher margin of safety, a lower contribution per unit, and higher fixed costs. Two answers coming through very quickly from Zinnia and Hilby. Alex and Ed both think it's D. So we've got some agreement amongst the contributions. Thank you very much for those. Great stuff. Let's take a look at the answer, please, Jim. Okay, so what we're looking for here is what would increase the break-even level of output. So the business has to sell more to break even. So if there's a lower contribution per unit, maybe the selling price has fallen, or maybe it has had to have been reduced to try and clear some excess stock in whatever the situation is, or the variable cost per unit might have increased, that's going to lower contribution. So therefore, if we think about our break-even formula, it's going to end up with an answer where we've got to sell more units in order to break even. And similarly, if we think of our formula, if a business is incurring a higher level of fixed costs, then more units have got to be sold in order to pay and help cover those fixed costs, i.e. they'll have to sell more to break even. Here's our last bubble quiz question here. Which of the following lines will appear on a break-even diagram? So although you might not be asked to draw a break-even diagram in your assessments and in your exams, it's important that you can interpret them. speed that some of these answers are coming through are very impressive. Well done, folks. The engagement, second to none. Excellent. Let's take a look at the answer, please, Jim. Now, the caveat with that question is lines, okay? We can graph total costs, we can graph fixed costs and total revenue. Of course, break-even point is what we identify at the intersection between total costs and total revenue. So that's not a line per se, is it? It's where we see whether they meet, then we'll draw down to find out that level of quantity, okay? So if you said A, C, and D, very well done. It's always a topic that's useful to go back over. As I said, you'll very unlikely be asked to draw a break-even chart. However, interpreting it is a really important key skill. Let's take a look at some exam goal before I hand back over to Mike. So the margin of safety is an important concept in break-even. Why? Well, it shows a business how much output can reduce or fall before reaching the break-even point. So we can think of it as sort of a buffer. It's also really useful as a quick calculation of profit, since we know that the profit that a business earns is equal to the margin of safety in units multiplied by contribution per unit. And as Mike said earlier, if you go back through some of your class notes, if you go through some of the questions you've carried out on break-even analysis and cost, revenues and profit, if you apply this logic, you'll see that it works. So it's an important concept to be able to rearrange formulae, because you just don't know how that information might be presented to you in an assessment. Okay, I'm going to hand over back to Mike now for Suitcase Scanner.
Thank you, Peter. So much exam gold in what you were saying there, both on the exam gold slide and before. Thank you for that. I'm hugely excited. This is a new activity. Many of us haven't been able to travel as much as we would have liked to have done in the last 18 months. So here is an activity called Suitcase Scanner. I don't think I'll be able to do it justice by describing it. So we're going to do our first suitcase scanner here, and we're looking here to see what are the fixed costs of the business. What you can do here is pop your answer in the chat window as before, but we're looking for the fixed costs of the business. Jim, can we start Suitcase Scanner, please? So much excitement out there. I can see from the comments in the chat window that that Suitcase Scanner is being well received, and we've got some answers coming through. Thank you, Alex, Tara, Zinnia, Hilby, for your responses. A few more seconds for those of you still typing. Great work and general agreement. Let's have a look at the answer then, please, Jim. Suitcase Scanner. The answer, of course, is £30,000. Well done, those that got that right. Some of you understandably put 30. So we're looking here, of course, for fixed costs. We know that fixed costs don't change with output. So on a break-even chart, they're going to be a horizontal line. Okay, and they obviously start at 30 on our vertical axis. But if we look at the label for the vertical axis, sales and costs are in thousands of pounds. So the answer here is £30,000. And as I say, well done to those that got it right. Look, this is edge of your seat stuff. Let's do another one of these suitcase scanners. This time we're looking to see what's the margin of safety if the business has an output of 5,000 units. So the actual output of the business is 5,000 units. What is the margin of safety? Here we go. It's pretty quick. We're looking for the margin of safety of the business. A few seconds if you're still thinking, you're still typing. Try and remember the formula for margin of safety. That's a good start point. And some answers starting to come through now. Different answers here, as to be expected. A more challenging question, perhaps. Let's have a look at the answer then, please, Jim. So the margin of safety, remember, is the difference between actual output and break-even output. So the actual output we were told was 5,000 units. So they're actually producing at 5,000 units. And the break-even point, as we can see from the complete chart, is 4,000 units. Well done those that are adding their answers now. The difference between 5,000 and 4,000 is, of course, 1,000 units. So there's 1,000 units as a margin of safety. And again, more exam gold coming through there in the chat window. Don't forget, margin of safety is also in units. Just like the break-even quantity, it's given in units. Suitcase scanner, that was brilliant. Let's move on though to a tried and tested activity, some multiple choice questions. So on the screen in front of you, we can see a table relating to the break-even output and contribution per unit of 4 businesses. We're asked which business has the highest fixed costs. We're given the break-even output, which we know is in units, and we're given the contribution per unit in pounds. And we've got 4 businesses, and we've decided to call them business A, business B, business C, and business D. The creative juice is definitely flowing there. Your job is to decide which one has the highest fixed costs. If you can put your answer in the chat window, remember we're looking for one answer here, either A, B, C, or D. Either A, B, C, or D. The answer is on the screen. You just need to decide which one it is. And with multiple choice questions, of course, if we don't answer them, we will definitely get them wrong. So if necessary, it's always worth having a guess. If you can narrow it down to 2 and then do a 50-50, that will increase your chances. A, B, C, or D. I can see the answers coming through, and we've got a range of them. Which business has the highest fixed costs? Okay. Can we reveal the answer, please, Jim? Lots of B's and D's in the chat window. And lots of people, I suspect, who are just holding off, not sure what the answer is. And a few now responding when the answer's on the screen. Yeah, business D is the answer here. It has the highest fixed cost. If we look at the break-even output, we look at the contribution per unit. Actually, if we multiply those two together, we can work out what the fixed costs of the business are. Remember our formula, fixed cost divided by contribution per unit will give us break-even output. If we rearrange that formula, we'll see that D is indeed the correct answer. Well done, Jim. Yeah, D is the correct answer. 10,000 multiplied by 20, 200,000 is the highest of those 4. If necessary, come back to the recording of this and check that and work through all 4 when you've got a bit more time. Here's question 2, closely following question 1 and in advance of question 3. Which one of the following statements about break-even analysis is true? We're looking for one statement that is true. A, an increase in contribution per unit will decrease the margin of safety. B, a decrease in fixed costs will increase the margin of safety. C, a lower selling price per unit will increase the margin of safety. And D, margin of safety is calculated as the difference between budgeted output and actual output. Between budgeted output and actual output. A, B, C, or D, answers in the chat window, please. And thanks to those who have already responded. So we're looking for one, and we're looking for the one that we think is true. See if you can eliminate ones that you know are wrong. And we are joined in the chat window there by Graham. Hello, Graham. Graham says he can see the answer. Lots of answers coming through here. And general agreement, I think. Let's have a look at the answer, please, Jim. It is, of course, B. Which one of the following statements about break-even analysis is true? Well, B says a decrease in fixed costs will increase the margin of safety. Just think about that for a second. If fixed costs decrease, if fixed costs are lower, the break-even quantity will be lower. Therefore, if the business is producing whatever level they're producing at, all other things being the same, the margin of safety will increase. There will be a bigger gap between the actual output and the break-even output. Well done. Tremendous stuff. And well done, Luke and Gabe, I can see there as well with the correct answer. Question 3. A business has a break-even output of 2,000 units when it sells at a contribution per unit of £8. The business currently makes a profit of £4,000. What is its margin of safety? This is a challenging question. Don't be alarmed. As I said to you before, practicing working under time pressure can help develop composure. Practicing dealing with challenging questions can help develop composure as well. So the business has a break-even output of 2,000 units when it sells at a contribution per unit of £8. The business currently makes a profit of £4,000. What is the margin of safety? Is it A, 250 units, B, 500 units, C, 2,000 units, or D, 2,500 units? A very challenging question. Nevertheless, answer in the chat window, please. All you need to do is type one letter, A, B, C, or D. A, B, C, or D. Starting to see some answers come through here. And lots of people, understandably, perhaps perplexed, not sure how to work this one out. We can do it. Let's have a look at the answer, Jim, please. The answer here is B. It's 500 units. Let me try to explain why. Remember, you can come back to the recording here, and you can watch this again, and you can try spend maybe a bit more time on it. Break-even output is 2,000 units when it sells at a contribution per unit of £8. So contribution per unit is £8. Remember that the contribution per unit is how much the sale of an individual product is contributing towards fixed costs. Once those fixed costs are paid off, then it's contributing towards profit. So if we divide the profit of £4,000 by the contribution per unit of £8, we'll get that margin of safety. We'll get the number of units sold above that break-even point. The profit obviously comes after break-even. So 4,000 divided by 8 is 500 units. 4,000 divided by 8 is 500 units. As I say, you can come back and you can re-watch this. You can listen to it again. And hopefully that will start to make sense. If you got that right, incredible, well done. Hopefully you did that by working it out rather than just guessing. If you didn't get it right, absolutely no panic. Very challenging question. Well done for giving it a go. Let's have a look at question 4, please, Jim. Question 4 is a 2-statement multiple choice question, and it's so called because we have 2 questions, 2 statements even. Statement 1 reads, an increase in contribution per unit will reduce the margin of safety, all other things remaining equal. Statement 2, an increase in the margin of safety has no effect on the profit achieved by a business, all other things remaining equal. You need to decide if you think that both statements are true, you're going to put A. If you think that statement 1 is true but 2 is false, put B. If you think that statement 1 is false and statement 2 is true, put C. And if you think they are both false, put D. A, B, C, or D, put your answer in the chat window, please. 2 statements. A, if they're both true. B, if 1 is true and 2 is false. C, if 1 is false and 2 is true. And if they're both false, it's D. Answers coming through. Lots of A's and B's. And some more B's. And Sasha and Poppy going with D or B. Remember, we need to we need to be able to give one answer here. Let's have a look at the answer, please, Jim. It may surprise a few people, although a young gentleman called Graham seems to have got it right at D. They are both false. Increase in contribution per unit will reduce the margin of safety. Well, an increase in contribution per unit is going to reduce the break-even point and increase the margin of safety. So statement 1 actually is false. Statement 2, an increase in the margin of safety has no effect on the profit achieved by a business, all other things remaining equal. Well, think back to your break-even chart. Remember the suitcase scanner. Everything above the break-even point is profit. Beyond the break-even point is profit. So the larger the margin of safety, the larger the gap between actual output and break-even output, the larger the profit's going to be. So it will have an effect on the profit achieved by a business. So statement 2 is also false. One more multiple choice question. Here we go. Business sells 25,000 units per year at a contribution per unit of £25. The business has fixed costs of £500,000. If both contribution per unit and fixed costs fall by 10% and output remains at 25,000 units, what will the effect be? A, if it's an unchanged break-even output and lower profit. B, if it's an unchanged break-even output and higher profit. C, if it's a lower break-even output and higher profit. D, if it's a higher break-even output and lower profit. This is our last calculation today. It's a challenging one. The answers we've had so far today have been excellent. The contributions have been absolutely superb. A, B, C, or D in the chat window, please. Read the question again. The business sells 25,000 units per year at a contribution per unit of £25. The business has fixed costs of £500,000. If both contribution per unit and fixed costs fall by 10% and output remains at 25,000 units, decide what's going to happen. A, B, C, or D, give it a go, please. Really good just to try to work this one out. Here they come. Well done. Ed, I think you were first in with that one. We'll probably see a range of answers here, and that's exactly what's coming through. Although actually a lot of C's. Good thing to do here will be to go back to the recording and just spend a bit more time here and actually work it out. Work out each of them. The answer here, please, Jim, is A. It's an unchanged break-even output. So the same thing is happening to contribution per unit, the same percentage change in contribution per unit and fixed costs. So remembering our break-even formula, there's going to be no change in break-even. So we know it must be A or B. Remember I said to you, try and narrow this down to two possibilities. So we know it can't be C or D. So it's either lower profit or higher profit. Well, we can work out the profit before and after. And the profit before, I think, works out at £125,000 and the profit after at £112,500 from memory. But the profit will be lower. So A must be the correct answer. Some really tough questions there. Brilliant to see so many answers coming through. Pete, I'm going to hand back to you for our final activity.
Thanks, Mike. Yeah, they were really challenging questions and some excellent explanations given as well. Thanks, Mike. Thanks very much. So, as you've seen, the majority of the material we've been through so far has been based on quantitative skills, but with break even, there's typically assessment questions that can be written as well. So what we've got on screen for you is an activity called On Balance. We're going to start off, we'd like you to put in the chat window 2 benefits of a business using break-even analysis. So we're thinking, how can break-even now be assessed? What sort of written questions might be asked? So benefits and limitations of the path we're going to go down here. Quick fire suggestions, please. What do you think are 2 benefits of a business using break-even analysis to support management decision-making? Tara first with an answer there. Thanks for that, Tara. To be able to see how much is needed to be produced to make a profit. Okay. How many units need to be made? How change in output will affect costs and revenues. There's quite a lot coming through now. I might struggle to keep up. There's some brilliant contributions. A couple more seconds. Think about what can be done once this process is being carried out. Yeah, comparisons and forecasting. I like that point because you can use it, particularly as you progress through your A-level course. You obviously taught it as a distinct concept in year 1, but as you move forward through your course and do concepts like this in year, excellent. Let's take a look at 2 benefits, please, Jim. Okay, so many of you alluded to these in your answers. It focuses management on keeping fixed costs under control. It gives them something to aim at. They know how many units of output need to be produced to break even within a given cost constraint. The second one we had was it's useful for setting targets. So dependent upon the nature of the business, it could be a sales environment, so many units need to be sold in order for the business to break even and then go on to generate that level of profitability. Of course, there's other options available. It's not just constrained to these two, and there's some fantastic answers given in the chat there too. So with any higher order tariff question in A-level business, we usually need to balance that out with something, don't we, if we're assessing the use of break-even analysis. So now can we move on to having a think about what two limitations of break-even analysis are? Time-consuming, unrealistic assumptions. Some great ideas coming through so far. Assumptions made may not sell all the units produced. Difficult for multi-product companies. From Graham there. Well done, folks. Some really insightful stuff that if you were to use these in an essay or a longer mark question, to be really good. So let's balance this argument often. So sales are not always the same as output. A business may know what it needs to sell to generate that level of output, but it might not actually be sold. It might have unsold stock or wastage that occurs, and therefore that skews our analysis. Secondly, it's harder to use where a business has many different product lines that may have different levels of costs associated with them. Okay, so if you go back through your notes again, you'll see that there are various different answers you could give to that. So if you didn't have exactly what we had, don't worry about it too much. But thank you very much for those contributions in the chat window. It's been excellent to see.
Yeah, I'll second that, Peter. Really good stuff. Thank you, everyone. Some really challenging questions.
Yeah, thank you.
I mean, yeah, I'm absolutely blown away by the standard of the responses by all of our students in the live chat tonight. I'm sure those joining us on catch up and replay will be just as good. But wow, I think a couple of those were some of the hardest questions I think we've ever set on a live stream, and just amazing, aren't they?
Yeah, absolutely. You know, and all credit to people for giving them a go. If you didn't get them right, there's absolutely no shame in that. Please just take some time, go back through and make sure you know where you've gone wrong or what you need to do differently next time.
Yeah, absolutely. Well, so somebody's asking the live stream, where can we get the slides for the session? I'll post a link on YouTube into the comments box as soon as the session's finished, so that you can go straight to it. It's a link on tutor2u.net/live. If you just go to the replay section and choose A-Level Business, you'll see the session recording, and log into your My Tutor2 account, download the slides. Then you'll be able to, in particular, I guess, work through some of those calculations. They were really complicated calculations and phenomenal efforts under time pressure tonight by the live audience, and pretty challenging questions for those who are maybe having a bit more time on catch up. That has been an amazing session. So a huge thanks to Pete and Mike for putting that together and for delivering it. Well done for everyone who's had a go. Sasha, Alex, all the people have had a go, and I think there's a guy called Graham who had a go as well. I got most of them right. Had a good go. Well done for having a go, G. Wow, this is a regular slot, isn't it? 4:30 on a Tuesday, Wednesday. What day are we?
We're on Tuesday today, Tim. Wednesday follows tomorrow. Maybe we'll do a days of the week activity as well.
I'll join in on that one. It's 4:30 on a Tuesday. A-Level Business. Next week we've got the session lined up. So go to tutor2u.net/live and see what that session's all about. If you've enjoyed the session, please give us a thumbs up on YouTube. If you've not enjoyed the session, if you've not found it useful, please give us a thumbs up on YouTube, because it helps YouTube suggest these type of sessions to other A-Level Business students. Fantastic stuff. We're going to have to go now. Huge thanks to Mike and Pete. We'll see you next time.
Thank you, everyone.
Thanks.
Bye-bye.
Bye.
See ya.